Hey everybody, Frank Finance here. Hope you're having a wonderful day. Today we're going to be doing a stock analysis on American Airlines, ticker symbol AAL. For today's stock analysis on American Airlines, I'm going to give my price target, look at Q3 2021 earnings, brief business description, the fundamentals and financials, look at relevant news as it relates to travel trends and vaccine news, look at issues facing American Airlines such as their debt, shares outstanding, their market cap, and their current stock price versus historical. We're going to look at their price performance versus peers. And lastly, I'll give my thoughts on American Airlines as an investment. Quick plug for the channel. I do videos on personal finance, investing, and stock analysis. If you like this type of content, please consider subscribing. Please hit that like button. Now back to your content. Now jumping into my price target for American Airlines, I believe American Airlines will probably be about $17 in the next 12 months. That indicates about a 15% downside to where they're currently trading in the $20 range. All right, looking at Q3 2021 earnings, on an earnings per share basis, they reported negative 95 cents per share. Analysts had them at negative $1.03, so they had a beat on earnings per share at 8 cents. I still left this as yellow because it's still negative, and that is really bad for the stock. On the revenue side, they reported $8.97 billion in revenue, and the analyst had them at $8.92 billion, or they beat by about $48 million, still in yellow as it's a very slight beat and their earnings per share is still negative. So I had to keep both of those yellow. Real quick business description for American Airlines. Basically, they provide air transportation services for passengers and cargo, and about 73% of their revenues come from domestic travel. All right, jumping to the financials. If we look over the last several years, 2017, 2020, you can see revenues were pretty consistent from $42 billion to $45 billion for fiscal year 2019. And 2020 was really down at $17 billion. Last 12 months, we're looking at $24 billion. So it's probably going to be, for full year 2021, definitely higher than $24 billion, as it looks like the recovery is underway. We'll look at that a little bit more later on. If we look at their gross margin over the last 12 months, things are starting to improve, down about 4.5% versus 31%. Looking at the current versus on the EBITDA margin, that's improving 19% versus 50%. And the best part here is net income margin is still down significantly, but it is still significantly improved from where it was in 2020. But one of the things to note here is their net income margin is very, very slim historically. So just keep that in mind as we move forward. There's not a lot of room for profit here. They did have large net income margin in 2015 and a little bit higher in 2016, but their 3-year average prior to the pandemic was around 3%. So not a lot of wiggle room there. All right, so next I'm going to talk about some of the factors affecting travel. So obviously there was a pandemic. We want to see how travel trends have been increasing since then. So if we look back in March 23rd, you can see 2021 had about 1 million folks going through compared to 2019 of 2.1. Now these things vary by the day. They vary by the day of the week as well as the part of the year. So just keep that in mind. These things aren't exactly 1-to-1, but we're trying. I grabbed multiple points to kind of get a trend line, right? So if we're looking back, we can see that generally things have been improving. This one being down is not that big of a deal. Really what you're trying to get is a comparison of the 2021 number compared to the 2019 levels. You can see this is only off by about 400,000 versus looking back just in March of this last year, off by 1.1 million travelers. So this is getting significantly smaller. You can see these numbers are getting closer and closer, off by 1 million. So they're like 1.1, 1 million. We're looking at 500,000, 400,000. And in this one, it's about 250 off, right? So things look to be improving from a travel throughput perspective. So that is a positive for American Airlines, at least getting their travelers back in planes. All right, jumping into vaccine information. Since COVID-19 had a huge impact on the travel industry, vaccines are kind of the catalyst to bring that throughput back. So we want to look at that a little bit more closely. We know United States domestic travel makes up 73% of American Airlines business. So let's look at the United States a little more closely. Here we can see that 67% have had either one dose or been fully vaccinated. Fully vaccinated is at 57%, and the folks having only one dose is at 9.7. So there's about 33% folks who have not been vaccinated. Now, this is according to ourworldindata.org. Moving over to the CDC's website, this is let's get a little bit more granular. So if we look at least one dose, the most vulnerable population being age 65 or older, they've had at 98.9% vaccination rate, which is, in my opinion, very good. Population greater than 18 years of age, that means every 80 people out of every 100 are vaccinated. 80% of the population is vaccinated. I'm pretty sure this is higher than what they were anticipating for herd immunity. On the population greater than 12, 79, not much lower, right? So still really, really good. Total 68%, just like we said earlier. Very, very close to what our world data shows as well. Looking over to fully vaccinated, these numbers are slightly lower, 86, 70, 60, or 70, and 58%. And going over to boosters, boosters have not been approved for all that long, maybe a month, maybe a little bit longer. So you can't expect that to be super high. But I think pretty strong encouragement from having at least one dose, this large vulnerable population. And I'm actually surprised. I didn't realize rates were actually this high when you consider that only those eligible for a large majority of the vaccination time period is 18 or older. And so you have 209 million Americans having at least one dose at 80%. All right, next up I want to talk about a pressure of debt and how it's been increasing and seems to be fairly large in comparison to their net income. Now, a reminder, their 2019 net income was around $1.6 billion. They're not going to get anywhere close to that for 2021. Maybe 2023 they'll be back to a full recovery. But just looking at this number for 2021, this is actually incorrect. It's around 35 or 36 billion. This was as of Q3 or Q1 of 2021. And so they've decreased that a little bit, about 1 or 2 billion. But overall, their total current non-current liabilities is around 58 billion dollars, which in comparison to their net income, in my opinion, is very, very large. So it just doesn't look good there. Just want to make folks aware of that risk. All right, now let's look at the recovery timeline as American Airlines stated in their Q3 earnings report. So right now, they're pretty much fully recovered on domestic leisure. Short-haul international is fully recovered. And their domestic business, according to Q3, is about 50% of their 2019 revenue. And all the whole point of this slide is, if you look down here, 45% of their revenues come from domestic leisure, 10% from short haul, 25% from domestic business, and 20% from long haul international. So based off of what this is showing, it looks like they could be at 80% of their revenues in Q4. In Q3, they're reporting at roughly 55% plus another 13%. So we're looking at close to 70% of their business or revenue is what they're saying they're getting right now. And so in order to get back to where they were in 2019, they're going to have to, this long haul international is going to have to open back up. And this domestic business, in my opinion, I don't know if this is going to fully recover. This is a big question mark. They seem to be pretty optimistic about that, but I'm a little skeptical on that aspect. All right, now on to shares outstanding. This is the huge piece of this stock analysis, so please pay attention. If we look at March of 2020, they had 426 million shares outstanding. And in March of 2021, that increased 49% to 635. And as of 9/30 of 2021, that's at 720 million shares outstanding, or a 69% increase. So this is huge. This is a huge piece of dilution of the company. And so as we move forward, please remember that shares outstanding is a way that companies dilute you. Now, the reason why they did this was so they could raise capital to, fund the business. But the problem is moving forward, the stock price going back to the same price is almost impossible unless revenues exceed what they were in 2019. So keep that in mind. And you can see since the pandemic starting, this sharp year-over-year quarterly growth in shares outstanding. All right, with that being said, looking at market cap, right now the market cap for American Airlines is around $13.14 billion. That means they're about $1.3 billion more than they were pre-pandemic. I'm comparing that to February 17th at 11.84 was their valuation. And as we stated earlier, the revenues for Q4 are only going to be about 80%. And I suspect that them to not get into 90% in full year 2022 and not a full recovery until 2023. And all that is with 69% shares outstanding. Hopefully you're starting to understand the issue with their market cap being where it is compared to where it was pre-pandemic. Got lower revenues, more shares outstanding, lower expected revenue going projected out to the future. We got a little bit of a problem here. All right, next up, let's talk about stock price history. So looking at the last 5 years, you can see they were up in the $40 to almost $60 at some point. But really, things have been bad lately for American Airlines. If you look at their stock price right before the pandemic, it was around $27.82 to current prices around $20.29 as of November 12th. So if we're looking at the stock price moving forward, knowing about market cap, knowing about shares outstanding, there's no way we're going to get back to pre-pandemic levels. Now, we did see that briefly hit $27. I don't know, there was this very big spike in pre-trading one morning, and that hit up into $20, $27, $28 a share. Then it quickly dropped back down into the $21, $20 range. And so right now, I expect this to continue to decline as folks realize that the recovery is going to be short, there's more shares outstanding, and there's not a lot of good things happening for American Airlines right now, except that things look to be getting better. However, they're still bleeding cash. Next, I like to do a price performance versus peers. So in this, I have American Airlines in gray, Alaska in blue, Southwest in gold, Delta in purple, and the S&P 500 Index, SPY, in green. At the 10-year mark, we can see that majority of the airlines have, I would say, in a large way, outperformed the index, with only one slightly beating the index, or slightly not beating the index. Now, everything under the 5-year mark in the last 2 to 5 years, the SPY has beat them. All the airlines are negative except for Love, which is only slightly positive. On the 3-year mark, all are negative, SPY is positive. On the 2-year mark, all are negative, and SPY is positive. In the 1-year mark, we're going to see that American Airlines is actually positive, 60% positive compared to the SPY at 30%, and the other airlines are actually underperforming. Now, one thing to note here is American Airlines saw one of the biggest drops as a percentage as compared to the other airlines during the pandemic. I'm hoping to show that like in this 2-year mark here. So you can see American Airlines is up here and they were all the way down here. SPY, much smaller drop. You can see price performance of Alaska looks like it was similar, but it had actually a lower starting point. So the percentage drop was actually much lower. So American Airlines actually took the biggest hit. They had, over this course period, they were one of the last to recover. You can see how their stock price remained lower while everybody else was rising. So when we're looking at this 1-year price performance, it's mainly because as the industry was starting to recover, American Airlines basically was falling behind, where they were just being left behind, if you will. All the other ones were taking off, and American Airlines was stagnant. And we just, like 2 or 3 months after everything else took off, American Airlines started to creep back up. Overall, I still think there's a lot of risk here with American Airlines. There's nothing to indicate that the next 5 years is going to bring them back to where they were pre-pandemic, or I should say, bring them up to somewhere significantly above where they were pre-pandemic, at least at a consistent level. They do have a lot of headwinds moving forward. All right, now my thoughts on American Airlines as an investment. Now we know full recovery for the airlines industry is not expected for another 1 to 2 years at this point. American Airlines continues to bleed cash, and with their expected net income to be negative throughout the remainder of Q4 of 2021, I don't know exactly if we're going to see that turn positive in 2022. Liquidity, they do have liquidity to get through the year. However, they still expect negative net income for the year, piling on more long-term debt, in my opinion. Now, they may issue new shares in order to do that, but the problem with that is the shares outstanding have already increased a significant amount by about 69%. And if that continues to go up, it just makes the valuation from a stock price perspective even lower. So that takes me on to market cap is above its pre-pandemic levels with 69% more shares outstanding, all indicating that the stock is overpriced right now, and it will not recover back to its stock price pre-pandemic where it was trading around $27. So right now, I believe the stock price is high compared to what it was in 2020. Now, and I believe that the stock price is going to be, it's $17 a share in the next 12 months, plus possibly even lower, down to $12 a share, indicating about a 40% downside risk. Now, I think on a more positive note, I don't think it's going to go that low, but I do think that in my mind, that is the floor. So the risk reward here is there's not much of a reward proposition for American Airlines from a valuation perspective. So this is a very, very, very risky investment. And I just want to clarify, I do not hate American Airlines as a consumer, but as a shareholder, the reasons I listed are good reasons to stay away from the stock at its current prices. So I had American Airlines, I bought them, I think around $7, $8 a share. I sold some at 20. I have a little bit left. And as I said, my cost basis is right around that $12 a share. I'm really just holding this on till it hits long-term. I don't think it's already at long-term at this point, but I'm just holding it as a little bit of a, just want to see what's going on in the airlines industry moving forward. But if you're a new investor right now, there's nothing but downside in the stock, in my opinion. So very, very risky investment. If you like this type of content, please consider subscribing. I do videos on personal finance, investing, and stock analysis. If you like this video or found anything helpful, please hit that like button. It helps me out a lot. My name is Frank Finance, out.